So throughout the week, my portfolio has been increasing, and it's at the point where I'm now positive in terms of the capital gains, and it's close to 2%. Now, if we think back to last week, those capital gains were non-existent, and at one time it was around minus 25%. So this video today, we're going to try and understand why the market has been increasing, and we're going to be looking at a range of sources to try to make sense of everything. So before we look further, it should be mentioned that I've been dollar cost averaging throughout this process, and it's clearly been working during this period. If we do nothing while our portfolio is losing value, then we never benefit from a recovery and the time it takes for a recovery to fully recover. So in my case, certain points in the last month, I've been down 30%, and it's been possible for me to more than double my initial deposit. And so I've been able to instantly reduce any losses by roughly a half. So if I'm down 30% and then I invest more than double of my initial capital and I buy stocks at a much discounted price, then immediately I can see a close to 15% reduction in the capital losses. And so, of course, that assumes that the market is very static, i.e. not dropping anymore. But once a recovery occurs, I just need the market to increase by 15% to break even in terms of any losses. So it's been very evident that the approach of dollar cost averaging has been extremely effective. So that explains why my portfolio has been reaching profitable levels very quickly, but it doesn't explain why the stock price has been increasing. So any sensible individual could look at the market and question why prices are increasing. It seems very counterintuitive that with businesses closed, with individuals in lockdown, the stock market simply shouldn't be increasing in value. And so it's a very sensible observation to expect the stock market to continually drop until businesses are at operational levels again. And for me personally, I expected the markets to drop further, or at least hold to the previous levels until the likes of the US and the UK revert any existing lockdowns. So let's look at some of the figures. In the UK, for instance, we have at least 2.5 million that are seeking unemployment. And with the likes of the US, we have more than 6.6 million filing jobless claims. And in both cases, it's quite probable that these numbers will continue to increase as the time goes on. So the question is, why is the stock market increasing in value when more people are laid off? And of course, when companies are in full lockdown mode. So one could suggest that the decrease in prices that we saw throughout the month, they have already factored in any of these types of numbers. And potentially in the likes of the UK, maybe it was forecasted that an even higher number would be seeking unemployment. But nonetheless, we have this contrasting reaction from the stock market compared to what is actually happening in the real world. Now, I have to focus on the US because stock markets in the US still dictate how other markets perform. And so the UK is highly impacted by how the US markets perform. And so in the US, we have Bernie Sanders, who was running for the second time for the Democratic presidential race, and he has since dropped out. So some people have speculated that the markets were positive because of this news, and it's just because Bernie Sanders' policies with respect to taxation for the more wealthy was seen as a negative for shareholders. And so some suggested that the market dropped because Bernie Sanders pulled out of the race. But actually the stock market was increasing for the few days previously. So of course some people may have suggested beforehand that Bernie Sanders would drop out of the election. And perhaps this had some impact, but I don't personally feel as though this is the underlying reason why the stock market increased. We also have the likes of Saudi Arabia and Russia. Now, they've been having this ongoing oil race to the bottom. And until now, the prices have just been decreasing because the supply side has just been growing and growing. And so the price has just been dropping as a result. And the two companies were just trying to outbid each other. Now, it appears as though there has been an agreement for the two to stop this price war on oil prices. Now, again, this piece of information, although the market can react positively, it technically just impacts the oil industry. And of course, there are other knock-on effects where other businesses rely on the price of oil. But this is just one other piece of news where the market has had the opportunity to react positively. But does it explain why we've had an increase in the stock market within the last week? My personal opinion is that there's more that we can look into to try to understand. Now that leads me on to the coronavirus. And we can see from this graph here that with the likes of the US, there is a hope that the peak is going to be hit very soon. And then following that, there'll be a decrease. And the same is hoped for the UK. We can see that in the early days, there was this ramp up, but since then it's taken a different curve to the likes of, say, Spain or Italy. So with respect to the stock market, many have suggested that if we are close to this peak, then we can pretty much work out how many weeks remaining there will be a lockdown. So bringing everything back to the stock market, and in particular, let's just look at the S&P 500 index. So if we go on to the 6-month time period, so we had possibly all-time highs back in February the 19th, and then we had an all-time low on March the 23rd. And we can see that was close to a 34% drop. Now, since then, we are close to 18% in reduction from those all-time highs. But relatively from the largest drop to date, we have gained close to 25%. So it's highly probable that the market is expecting a reopening of some form in the relatively near future. And should that not be the case, then we will see prices drop again. But what you have to understand with the stock market is that stock prices are always based on what the world would look like in the future and not how it is in the present. So markets are quick to react when something bad happens, and then the prices are accounted for very early on. And when it's predicted that the market will be better than what they first predicted, then you can see this correction in price. And that's what I see in the market right now. Now, given the market has dropped because of necessary lockdowns for countries that failed to do mass testing from the beginning, you can argue that there's a potential for a speedy recovery, assuming that the lockdowns don't persist for much longer. Equally, we could see a reduction in the stock market price, and that could be because the market has got everything wrong. But for now, I'm swaying towards the opinion that markets believe that this peak in the coronavirus has or will reach very soon. I disagree that people should start opening up the lockdown anytime shortly after that peak has been reached, because you will see a second wave otherwise. So you have to wait until that number has hit right back to the bottom. But without a doubt, all of the pieces of information that I've shown today has caused investors to be more bullish than they have been in the past. Now, what you have to remember is that the stock market is just made up of individuals like myself. For instance, I have been buying into more companies than I would have in the past. Now, given most of the trades happen from automatic computers, those systems are what drives the price up more than any individual that buys and sells shares in the stock market. But no doubt there has been a small contribution from investors like myself that have been buying more than we otherwise would have, and that can help push the price up a bit. But all in all, the sole focus is on the coronavirus. It's always on the expectation on how the future will be rather than how the situation is right now. So of course, no one can really explain why the stock market moves in the way that it does. But those are my thoughts at the moment. The question I have to ask myself is, will I still be dollar cost averaging into the market at these current rates? For now, I'm going to slow down a little bit and reevaluate in early May. But it's been positive knowing that my approach has been working exactly how I wished. Of course, this whole video is focusing on capital gains, and that is just one part of the picture. It does mean that any purchases in the future become more expensive, and I'm not worried if the stock market drops in the future. In fact, I actually hope it does. I think it's a little bit too optimistic right now. And if the prices do drop, then I will dollar cost average at the same levels from previously. So I hope that helped paint the picture a little bit more in terms of why the stock market has reacted in the way that it has. It's all speculative, just like everyone else out there. I'm curious if people have other opinions, so feel free to leave comments down below. But with that said, I'll catch you in the next one.